Hi guys, welcome back to my YouTube channel. If you're new here, my name is Sarah Wanyama. This is where we inform, we influence, and we impact lives. If you are a returning subscriber, thank you so much. Don't forget to like this video and to share it with the world. Don't forget also to subscribe and to put on your notification bell. So let's get into the video. Investment scam. So many people are genuine. They want to invest in genuine ways. They want to invest and grow their money. Now in this era, people are more aware of their wealth journey, of their investment journey, of how they want to grow their money, and they are hungry to do so. Likewise, there are so many people who want to earn money by scamming, and so many investment scams that have come up. Many people are being scammed. So that I decided to discuss this topic. I did a live on YouTube on investment scam, and people told me, some people came out and said how they were scammed money. This lady who DM'd me, and she told me that she was scammed $500. That's equivalent to 50,000 Kenya shillings. There's another one who was scammed $300. That is equivalent to 30,000. And there's one who was scammed $1,000, which is around 100,000 Kenya shillings. And it was so sad listening to them and just reading their stories about their hard-earned money going to waste. And they was one of them, the one who lost 50,000 Kenya shillings, was so honest, and she told me that she didn't really know, or she didn't see the red flags because she didn't know what to look for. She didn't know whether they are scammers. They just looked as genuine people. So what are the types of investment scams that they are there? One, pyramid schemes. The pyramid schemes is where just looks like a pyramid. I hope it looks, I have a picture of it, but it looks like a pyramid where the top has few people. So the investors, the early investors, are requested to recruit more people so that they can earn interest. Others pose as good businesses, and there are so many, especially in campuses. There are so many people who get into campuses and they are lured into these pyramid schemes. You're told to sell a certain product, you're told to recruit people to sell those products, and then the more you recruit people, the more you earn money. During COVID, when we were on lockdown, this thing was on full force. You were told that it's an app. The story was it's an app that they want to launch in Kenya, and so that it can be known, you recruit people. But for the initial investor, so that you can get in, you have to pay a certain amount, and that's the amount of money that the early investors are paid. So after a while, the scheme freezes out, and you won't hear of them anymore. So that's a pyramid scheme where you're called to recruit more people to grow the farm or grow the company, and others portray or pose themselves as big companies that sell legit things, but truly it's a scam. Number two, the Ponzi scheme. Scamming has not just started now, but there's a guy in the 1960s who scammed people, and that's where the Ponzi scheme originated from. Investors brought in money, and that money, the late investors' money, is you don't need to recruit, but people are called into investing in a legit business, which was not true, and then their money was to pay the early investors. And the narrative is, the earlier you invest, the more money you get. And therefore they are bombarded with these stories of early investors and so getting so much money. At the end of the day, because there are no more investors, then the late investors lose their money. So that's the Ponzi scheme. Then there is a third one that is called pump and dump. What happens with the pump and dump? Scammers, they buy low priced stocks from a thinly traded company that is listed on the stock exchange with low liquidity. They then spread false, exaggerated or misleading information regarding the shares to increase their stock price. And unsuspecting investors get excited and believe the stock has promising prospects and then rush to buy, causing an increasing demand of stock prices. And then after they have bought the stock, the shares, the stocks go back to their normal prices. Then eventually, because it's a thinly traded company, or shares, then they are not bought, and then that's how those investors lose money. So even in the stock exchange, you should be aware, you should be vigilant, you should be on the lookout, because you can lose money in the stock exchange. So how do investment scams look like? How do they look like really? How will I be able to identify? One, they promise high returns at no risk whatsoever. If you invest in a particular scheme, so it is zero risk but high returns. But what we keep on saying in this platform is that high risk attracts high returns, low risk attracts low returns. So there is no way someone can promise you high risk with zero returns. There is no way. Number two, the institution that you want to invest in is not regulated by any regulatory body, or not registered under any regulatory body. So go check the regulatory bodies, CBK, CMA. If it is not registered under them, then that's a scam. Number two, if it's not registered or regulated. Number three, being promised high returns, the more people you recruit into your investment scheme. Investors have no time to recruit. Investments speak for themselves. So if you are being told to recruit someone so that you can earn interest, then run for your life, run for your dear life, run for the sake of your money, run for the sake of your hard-earned money. Number four, you're being pressured into making an investment decision because the opportunity will close, or because the fast people will make much higher returns than late investors. Take your time. You don't need to rush. If you're being pressurized, then it's not good for you. Just take your time. Take your time. Investments are a huge make a huge impact in your lives. So if someone is rushing you, then you need to look into their motives. Number five, investment opportunities whose owners are not known. Guys, you need to know where you're investing your money. How does it work? How do they make money really? Who are the owners of this investment, or who began this investment? You need to know. So do your due diligence. Number six, investments that promise unrealistic returns. So the market rate is maybe at 7%, but they are promising you 15 or 25%. That's dangerous. Look at the average market rates for investments like the investment you're being told, and then compare. If it is there's a big difference, then you need to be skeptical about it. Number seven, investments that promise returns despite of circumstances. The investment market is a volatile market. Certain situations may affect positively or negatively the investments. So if someone is promising high returns despite of circumstances. The returns do not change even when there is negative information. For example, currently where right now Russia and Ukraine are in war, there are certain investments that have been affected. And if you have invested in such an area and you're still being promised high returns, then there is a problem, right? So you need to do your due diligence. If they are promising fixed returns, then there is a problem because investment markets are volatile. Number 8, investment opportunities that bombard you with testimonials, especially from people who have made a lot of money, who constantly seem to be on holiday or somewhere buying expensive gifts, cars, houses. Especially, I don't know if it was called, someone told me it was called AIM Global. Those people usually, when they are recruiting you to join their investment, whatever, they send you pictures, good pictures of people who have made it, good pictures of people who have bought good cars, houses. But when you go to the ground, the people who actually do the sales of those things, wow, they talk, the language is otherwise. If they are bombarding you with unnecessary testimonials that show that the investment is thriving, then you need to do your due diligence. Number 9, short-term maturity. They are promising you very high returns, which means it's risky in an unrealistic short-term period. For example, if someone is telling you they are investing in real estate and they are telling you they will give you returns within 6 months, then you should be skeptical, because real estate is a long-term investment. So if they are promising short-term maturity for long-term kind of investments, then you need to do your due diligence. Number 10, no documentation, especially if they are investing in such things as land. You know, if they don't have title deed or they don't have those documentation, then run. So how do you protect yourself? What measures should you take to protect yourself from scammers? 1, ask questions. Ask. I tell people, for example, you want to invest maybe in a money market fund, call the fund managers, ask them, where will you be investing my money? Or any unit trust, balance fund, all this kind of unit trust. Call them and ask, where are you investing my money? How does it make money? Some of us, we proudly say, I have invested in this and this, I've invested in the stock market, but we don't really know how do they make money, right? So you need to know, how do they make money? Yes. How do they generate income? What do they invest in? So that even you can know whether they are in line with your values. Number 2, do your due diligence. Research on that company, in and out. Research, is it registered or regulated by any regulatory body? Does it have history that is not good? What is their financial health? Looking at their financial statements. So these are some of the things you need to look at. Number 3, take time to conduct a background check. As I said, it's the same as due diligence. Conduct, ask questions, read on them, look at their financial statements. Number 4, invest only when you understand the investment opportunity. And invest in things you understand. Most investors know this. Invest in things you understand. Do you understand petroleum? Invest in petroleum. Do you understand how the banking industry works? Invest in banking industry. Do you understand farming? Invest in agriculture. Don't invest in things that you don't understand. You're there investing in IT and you don't even understand what it is all about. So invest in things that you understand. Number 5, seek a second opinion. Ask a financial advisor to look at the investment opportunity and give an independent review on it. Ask people who are knowledgeable, ask people who can be able to have a clear mind even when they are making a decision about it. So I hope this video is of help. If it is, don't forget to like it and don't forget to share it. Till next time, bye.